If you're thinking about a career in fintech law, then this video is for you. Now, when we talk about the word fintech law, what do we really mean? Law relating to financial technologies. Did you know that the global fintech market is estimated at almost $5 trillion and that there are more than 12,000 fintech companies and startups in the world? Fintech law is usually divided into three aspects: law relating to securities and financial assets, the regulated entities, and thirdly, regulators, tribunals, and enforcement agencies. Every time a startup gets funded, we read about it in the media. Now, we hear about angel funds, VC or venture capital funds. All of these are regulated and governed under the fintech law. Then you may have heard about a concept called peer-to-peer lending. What does that mean? Usually, you put your money in a bank. In return, the bank gives you some interest. With that money, the bank gives loans to other people and charges them a little higher interest. And whatever that difference is, it is what the bank earns. Now, peer-to-peer lending works in a similar way. The difference being, you don't really have a bank in the middle. You have a technology platform called a peer-to-peer lending platform. Individuals like you and me can sign up there. I could lend money to people on the platform, or I could borrow money from people on the platform. So even something like, I want to do the interiors of my home. I need a short loan for that. I could approach somebody on a P2P platform. That's another thing which is a very exciting area of fintech law. Another very interesting area of fintech is called invoice discounting or trade receivables discounting. What does that really mean? Now let's say I supply tires to a very large car company. Now this month I've supplied them 1 crore rupees worth of tires. I give them an invoice. They check the tires, the quality is fine. They approve the invoice saying, yes, we have received 1 crore rupees worth of tires. This is the invoice for it. We will pay you after 90 days. Now that's fine for a lot of people, but some people may say, no, I don't have enough liquidity to hold on for 90 days. I need the money now because I've got salaries to pay, raw materials to buy. So what I could do is, as that small vendor, I could go to an invoice discounting platform. Say that this is the invoice which I've given to this very large reputed company. They're going to pay me after 90 days, but I need the money today. So who's ready to give it to me? So somebody could bid that, okay, I'll give you the money today, but I'll deduct 2% as my interest or my commission on that, in a way to say. I could say, okay, that makes sense to me. Then I hand over the invoice to them. Of course, it's done in a dematerialized format. I get the money today. 90 days later, when the company pays my invoice, the investor gets his money back. So he's made a profit on it. I've got the money today when I needed it, and the platform gets its own commission out of it. Now, this is one of the very new and very interesting areas of fintech. Fintech law also covers the regulatory framework relating to stock exchanges, depositories, credit rating agencies, foreign portfolio investors. Lots of such regulated entities come in. Pooled investment schemes come in. We spoke earlier about angel funds and VC funds, but there are many more. There are mutual funds. I'm sure many of you invest money in that. There are collective investment schemes. There are SME funds, infrastructure funds. All these also come under the gambit of fintech law. Another very interesting area in fintech is the concept of a regulatory sandbox. Now, sandbox in technology is a safe way of testing out something. So let's say I'm a person who researches into computer viruses. Now I'm obviously not going to run that computer virus on my main computer. So what I would do is set up a separate machine which has all the security implications built in, and I would test or research on computer viruses using that. We usually call that concept in technology as a sandbox. Now, what does a regulatory sandbox mean? In a similar way, a regulatory sandbox is when the regulator sort of gives you a temporary exemption, saying, look, the kind of innovation that you are bringing in, you are trying to use financial technology for this innovative financial concept. As of today, either the law prohibits it or there is no law governing it. So I am giving you a temporary waiver, say 3 months, during which, under my guidance, using the approved investors or customers, you are going to now, in a real world scenario, try out your innovation. Let's take an example. So my company is, let's say, a blockchain startup, and we've come out with a brilliant way of using the blockchain technology for distributing bank guarantees. Now, as of today, there is no law which says that we can do it. There's no law which says we cannot do it. So everyone's worried banking is a highly regulated sector, so nobody wants to take the initiative. So we could then approach the Reserve Bank of India saying, we want to use this technology, we wanted to use it for this purpose, today no law permits it, so give us a temporary waiver. So after analyzing our request, the Reserve Bank of India could say, fine, you can do it for a period of 6 months. These are the 3 or 4 large banks which are approved, and you can do it for a maximum of, let's say, 25,000 bank guarantees, each of which cannot exceed 1 crore rupees in value. This would now be what we call as a regulatory sandbox. And after this time period is over, we would submit the detailed reports to the RBI, and then they could decide to say, okay, we will now allow this to be done over the long run, or they could say, no, this is not allowed to be done. Now, globally, most of the leading economies have already announced their regulatory sandboxes. Some countries follow a concept where the regulatory sandbox is for a limited period. Some have the sandbox open through the year. Sandboxes are usually in the area of banking, stock markets and capital markets, and the insurance sector. So what does a fintech lawyer do? So one is, of course, he would help all these entities that we spoke about, whether it is mutual funds, venture capital funds, angel funds, peer-to-peer lending platforms, trade invoice discounting platform. He would help them to firstly get registered, then take care of their regular compliances. As you know, these are very highly regulated sectors, so a lot of regular compliance work needs to be done. That's something he's going to do. Another thing is, whenever companies or startups are raising funds, they could do it in various ways. Usually it's through debt or through equity. Sometimes, in certain cases, there are hybrid instruments which combine the elements of debt and equity. Then there are also derivatives. Whenever such kind of financial instruments or securities are to be issued, a lot of regulatory work goes in. A lot of compliance, documents need to be created, prospectuses need to be made. All that is something that a fintech lawyer would do. A fintech lawyer also represents clients in front of various entities, for example, the regulators. So you have the Reserve Bank of India, which regulates the banking sector, the SEBI or Securities and Exchange Board of India, which regulates the securities market, the Insolvency Board, the Competition Commission of India, the Pension Fund Regulatory Authority. So a fintech lawyer would represent clients before them. Then we also have tribunals like the National Company Law Tribunal, the National Company Law Appellate Tribunal, the Securities Appellate Tribunal. A fintech lawyer would represent before such tribunals also. Then there are the enforcement agencies like the CBI or the Central Bureau of Investigation, the police, the Central Board of Direct Taxation, Indirect Taxation. The fintech lawyer would also represent clients here. So if you love money and technology, actually who doesn't, then fintech law is perfect for you. If you like this video, don't forget to like, share and subscribe.